Hey there, welcome back. Axia Trader Mike here, coming at you from London HQ. Now, Saturday is probably one of the most important days of your trading week. Now, why is that? Well, throughout the week, you are focused and dialed on what is coming at you from the live markets. How you immerse yourself, how you capture what you're immersed in, and how you organize what you captured is critical. And when you put effort towards your future self over the weekend, it becomes a much easier process for you to become a better trader. So today, I'm going to show you how you can annotate a live video of your footprint and how you can use those annotations to help you recall patterns and have a greater understanding of your thought process rather than having to look through your notes or through your Notions or your Evernotes, but really just click play on a video and quickly immerse yourself in that experience that you had and gain a much greater understanding for the next time that that pattern rolls around. All right, let's have a look. All right, folks. So what we've got here is a standard footprint chart of the S&P 500 on Thursday, May 15th, 2025, just a couple days ago. The jigsaw ladder on the right, for those jigsaw users, you're going to be able to recognize that ladder. You've got the volume profile here on the left column next to the price. You've got just an alert column, the active footprint, as I like to call it, or known as the current net ask, the current net bid, the snapshot, the bid, the offer, and a total at bid, total at offer, which is essentially a non-refreshing version of these two columns that you see here. Now, this chart on multicharts.net is, again, just a very simple ask versus bid with the ask on the left and the bid on the right. And this is a 30-minute footprint, right? So this is the standard, I would say, essential chart to have when studying footprint alongside volume. I want you guys to avoid thinking too much about the current net ask and the current net bid column. You can have a look at how the market is trading into the bid and the offer, but really the volume profile along the side here is where we're going to keep our focus in regards to how each 30-minute footprint bar trades through those volume nodes and lack thereof. Okay? Again, the concept of markets moving to, through, and from liquidity. All right? So, folks, what I want to highlight here is that this is the US cash open. So if I go ahead and click play here, you're going to see that the bars with the time stamp on the bottom are showing 8 to 9 a.m. Eastern. So this is actually the 9:30 bar that we're coming out of at this point. And this is a really important time to have a footprint, I think. You know, Richard, one of our head coaches here, which many of you know, says often that the footprint is like knowing where the ball went, while the ladder and its pace is watching the ball move. And I would very much agree with this. And that's why having these two layered next to each other for your weekend debrief is critical for making you a better trader. Now, what you can see here is that I am starting to use my pen here. By the way, this is just Epic Pen, easily accessible online. You can download it for free. Now, what I'm doing here is I'm about to start annotating the sort of observations that I am seeing in this footprint and where there is sort of a micro hypothesis on where this cash open drive is likely to attack positioning. So I'm just going to go ahead and fast forward this a little bit because clearly I'm just watching the market kind of develop here, just making some adjustments on my ladder. Now you can see, not to be confused with the current pen that I have here, you can see that I am now looking for areas of interest or points of interest, if you will. But I can tell you now that what makes this support look firm is two things. One, I already told you, the buy and balance that's developing out of an already sort of clear buyer controlled market. Number two, the fact that the selling that developed through the pre-US cash open, coupled with what I'm seeing in the overall breadth of market, has been absorbed, meaning sellers are not getting anything for the price below 74. That price below 74 doesn't manage to hold for more than an hour, and then you get 1 hour, 2 hours, remember 30-minute bars, 3 hours, almost 4 hours now of a lack of initiation of that area. Now, we all know how an open drive cash can behave. It can be volatile. It can sweep the range. So that's why it's critical that you spend the time trying to understand what the market is doing and how good of a job it is doing at it, right? So I've identified support. I've identified a buy and balance. And now if we just take a moment, because I was talking, to look back at this box that I placed on the top left, you can see here I've written weak positioning. So I've defined a true support, a firm positioning, and now an area of weak positioning. Now, what makes this area weak? Well, number one, the low volume. This is going to be always a critical understanding that you want to take note of. Think of the caught in the hole trade that Richard has taught in many career programs. And this is where it starts. The idea that overnight positioning, although firm and real, is usually built on low volume, right? That low volume, once addressed with high volume, tends to be a collision that is either absorbed and rejected and the market is brought back down to where it came from, which was the initial balance of that overnight session, or the market is then rejected and then heads for a higher value area, right? Now, as I've been talking, you can see that that has very much developed here going into the 3 p.m. UK, 10 a.m. US hour, or half hour, if you will. And you can see that very clearly here where the market essentially, and I'm just going to rewind a little bit here because it's kind of gotten ahead of us. What's important here to understand, now that you've seen how my annotations played out, it's important to understand what to expect and then analyze and observe and take notes on what actually happened, right? So for example, let's just speed this up a little bit to 1.5. You've got a market that has tested that break of positioning now twice, right? You can see where the sellers stepped in here. As on the right there, that buy and balance is starting to weaken and you're starting to see an absorption of sellers. So now you know that the way the market behaves as it retests these multiple bars that we identified as buying imbalances that could not make a lower low with the exception of this true support. This is where you want to be extra diligent in understanding if sellers are getting what they're going for, right? And you can use the volume profile. You can use that low volume node that we're approaching here at 84.75 to try and identify the pace at which the buyers interact, if at all. Now, again, let's just focus on the volume and the actual last traded quantity and watch how it develops in and out of that volume node, right? Or sorry, that low volume node. You can see that there's a pause. You can see that there is a willingness to stay steady and not gun through and attack this excess here. So far, it's looking very clear that the imbalance to the buyers is continuing, and you can see that being filled out again like we mentioned earlier. Notice as well, the volume bar, understandably so, is increasing very quickly here, surpassing any of the volume size that we've seen up until this cash open drive, right, folks? So again, everything here is stacking up. And the next time you see this pattern start to develop, and you've not only made the observations in the notes, but you've also re-experienced that rotation in a calm setting, like on a Saturday evening when you are not distracted by markets, you're not distracted by headlines, and you're able to clearly focus and understand what the market is doing and how good of a job it is doing it, right? And again, you can see those buyers are steady. And we all know that when markets are moving quickly on a volatile VIX to the downside, like we saw in April, there is a very different behavior, a very different pace. And this is a completely different market now going into the middle of May, where you have low volatility. You've got the VIX back below 18. You've got sequences on the S&P like this, where there is a slow accumulative. I'm going to fast forward this a little bit to the actual breakout of the area, because as you can see, this is where you're going to see a pace change. So as the market retests this point of control from the last 3 open cash drive bars, there's where you can see that volume is starting to accumulate and essentially reject hanging out between 87 even and 93 even for much longer. And you can really see that. It's almost like the market is desperate to get out of here. It's like it's just itching to get away from this area. No matter how much it wants to get below that 87, it just has really no interest. And you can start to observe other elements as well. You can see there's a clear buying tail there. You can see that the same buy and balance that we've acknowledged on the footprint is visible now on the active current at ask and current at bid. You can see that there's large accumulative thousands moving through what is now the second accumulation area of this sort of double distribution bar, where this is where the point of control was, and now it seems to be moving up to 93 and 96. These are these critical observations that are much easier to capture when you are looking at this over the weekend, folks. Now, for the grand finale, if you will, we will see how the market starts to find some sellers, as you can see within this 93 zone, perhaps those that think that this is a fade to break of downside. So you can see they get a little something, right? Then immediately right back to that desperation to get away from 91s, that area where sellers were starting to get something. They're being absorbed. That absorption is continuing. You can see that there is kind of a ledge to climb here, with the 95 zone being the next point of reaction. And this is, again, completely based on the fundamentals of understanding your volume profile with low value nodes and high value nodes, right? So you can see, again, the market is struggling and struggling and struggling to acknowledge that 90 through 87 range. And every time it gets back there, it just struggles to create any pace to the downside. Now, I'm just going to fast forward again a little bit for the sake of time. As you can see, the next bar has opened, and this is where you would expect a little bit of acceleration, as you just saw there. This is where it's going to come out. So you can see the market's accumulating a nice value node, and pop, right there, you get the release, right? A nice, healthy green bar to confirm what you already know. Now, this is one area where you might have gotten caught up going, aha, this is a buying imbalance. I'm going to buy this market. However, what we're about to witness is that this accumulation and distribution of volume is not complete. And this is why often when you look at the volatility of a cash open drive, it tends to look very erratic before then providing continuation, folks. So as you can see here, as it starts to break through that high, it does indeed come back for a little bit of reversion. As you can see, it comes all the way back to that 91 through 87 zone, which is critical to understand, right? Just because the market rejects and looks for value higher, it doesn't mean that it's done creating a higher low. And that's the key bit there, folks, because as you know, these are futures, and futures are leveraged, and thus these small moves count, right? So as you can see, the market starts to distribute the bottom end of that range, of the new range, if you will, between 905s and 90, call it 95s, a little bit of 93 as the lowest kind of area of that zone. But again, the market continues to do an excellent job in developing a buy and balance with a nice, healthy and green absorption against those sellers, right, folks? So there you go. In about 20 minutes, you've just debriefed something that is going to stick in your mind. You're going to be able to review it on your phone, on your laptop when you're at home, and you can keep adding notes and keep distilling and solidifying these critical observations that you carry through into your active consciousness when you are trading the live markets. All right, folks, have a great rest of your week, and we will catch you all in the next one.